What's up, stock traders? My name is Mike Huddie, and today I want to go over BBIG. Just a very textbook first red day chart pattern, one of my bread and butter chart patterns that I go over frequently. More specifically, in the last stock therapy session, number 45, we talked very in depth about intraday entries and exits and price targets. But today I just want to give you a broad overview of the chart pattern, of the big daily chart pattern, as well as I do believe BBIG to be a very good case study on dilution and how shares outstanding and share structure of a stock does affect price action. So if you like what you see, definitely hit that subscribe button, ring that bell, and be ready. Let's get into it. So I want to start off this video by saying, I'm not a financial advisor. This is a very brief and not in-depth look into dilution and share structure of a stock. This is, again, I'm not like the most advanced. I don't know everything about dilution, warrants, convertibles, registration, effective statements, all the stuff that, look, if you want to be really deadly with it, you can go Google and learn all about. But this is just a brief overview of what I look into when I'm, researching a stock. And specific landmines that I see that A, make me not want to long it, or B, make me want to be a little bit more patient on the short. It's just good information to have in the back of your pocket when you know what the company's been doing and how that might affect the price action of the stock. So BBIG, this is dilutiontracker.com. They're a new friend of mine. Not that I actually know the people behind dilutiontracker.com, but it's a new tool that I do use. I think they put the information out there in a very cohesive and convenient way. You can sign up for the full service. It does cost a monthly bill, but the free service is pretty much enough of information for me to be advantageous with it. So for the purpose of this video, all we need is the free information. So I'm going to type in BBIG. And again, it's going to give me a quick overview of the company, but what I'm really concerned with is the historical outstanding share count and potential dilution, this chart right here. And we can see that this company, at one point had 8 million shares outstanding, pretty much a year ago, 2 years ago. And now it has 150 million shares outstanding. If I scroll down a little bit more, it tells us about the cash. And then a little bit more, this is where I get very interested. You can see that they have a number of warrants. Warrants are, financial instruments. You can convert a warrant into common stock. So, without going too much, in depth, we can see that there are a ton of warrants convertible at prices lower than the stock was trading at just 2 days ago. Whether these warrants have been converted, whether they still have some to convert, that's not what I'm, really wanting to go into. I'm just saying, this is a circumstance where this is a stock that has potentially a lot of supply. If these warrants are converted into common stock, that's going to be people owning the common stock at these exercise prices. And if the stock is trading at, the other day it was trading at $5, and let's just take, this Series A warrants, just for example's sake, if these people have common stock at $265 and the stock is trading at $5 today, what are those people going to do? They're up 100% on their common stock. It is, you can stretch your imagination to believe that they want to make a profit on their common stock, just like we do. So, when I'm going through, a stock like this and I'm seeing tons of different avenues of dilution and conversion prices that are much lower than the price of the stock today, what I think is there's going to be a lot of added supply, not just retail traders, not just us trading the stock, but these people with a lot of money at much lower prices. So when the stock has this really quick 150 200% run, whatever it was, these people could be looking to sell. These people could be looking to stuff the move with their added supply. So it's something to know. It's something to know that this is going on in the background of the company. It makes me definitely not want to long it, and it makes me very curious about how long I want to be short. Because again, I just think that this is added supply. This is adding selling pressure, and it's a lot bigger than retail traders who are generally smaller fish in terms of the pond. So I'm looking at this stock. It's quite obvious to me that this is a horribly dilutive stock. And it's spiking really big. So my ears are up. I'm looking for a short, and the way I look for a short is I'm looking for chart patterns. I'm looking for specific daily chart patterns. I don't just randomly short because I see something's dilutive. I still have to wait for something to get extended, put in some continuous trend, and look for some kind of trigger to get in and be involved on the downward side of the price action. But it's good to know that, again, in my opinion, this company has been doing some terrible things relative to what retail traders would expect out of a company. So let's get into the chart now. Let's talk about, the first red day short. It's pretty much a textbook trading pattern for a lot of day traders. For me, I'm generally looking for a stock to trade, massive volume and go on a 3-4 day run. 3-4 days is kind of my sweet spot. Of course, they can go way higher and they can be 2 days. It's not an exact science. It's always a moving target. But specifically what I'm looking for is a continuous run, green day after green day after green day. And as well, I like the volume to be growing exponentially. The more and more volume, if it starts at 2 and, we have 100 million shares on the day, and then, we're at 5 and we're trading close to 300 million shares on the day. So the volume is growing as the price grows. I do have this, assumption in the back of my mind that says this volume is exhausting itself. It's going to be very hard for this, whoever is, manipulating or supporting this stock, it's going to be very hard for them to support this amount of volume, especially if there are a lot of sellers. So my general trigger, it's not a secret. I'm not like, this has been talked about widely. I'm looking for that first day it's red. That's why I like continuous green days. Green day after green day after green day after green day. That first time that it's red, that first time it's below the previous day's closing line in a number of days, I consider that to be a huge trend reversal. So I'm looking to get in short. So I'm going to zoom in on the chart, on the part of the chart that I really care about. Again, we have the example 1, 2, 3, 4 green days. Not specifically continuous, but it is a really nice trend. This is the first day that it is a red day. It actually gaps down. Spikes actually green on the day for a sec, stays below the previous day's high, and then starts to unwind. A really, really great unwind, 3 days in a row of red days, a lot of selling pressure, very heavy. What that might be, it could be just retail coming out of it. It could be those warrant holders just nonstop selling. There are a lot of assumptions I can make here, but at least I know the assumptions to make because I've done just a little bit of research. For me personally, I'm generally trying to get short on that first red day after that multi-day run and stay patient for some kind of unwind. Do I think these stocks are going to zero? Absolutely not. But do I think there's going to be some volatility to the downside, some kind of predictable pullback to take advantage of? Absolutely. I did end up getting short on this first red day. I was short, 515, 517, and ended up covering up towards the 425s. I never ended up re-shorting it, but that's fine with me because, again, my pattern is the first red day. I've definitely seen some opportunities to short it, into bounces and stuff like that. But my bread and butter, where I like to stay, where I have the most comfortability, the most familiarity, is that first leg down after quite the uptrend. So this is a pretty picture perfect bread and butter pattern for myself, as well as, a pretty good stock in terms of dilution. Not a good stock to buy, but a good stock to, do this kind of, research on, and a good case study for, how toxic companies kind of react to market action.